Hi guys, welcome to the Simplify LLC channel. In this video, we will talk about choosing between a partnership or an LLC. If you are new here, don't forget to subscribe and press the bell icon to be notified when a new video appears. Let's dive right in. You're starting a business, a huge endeavor, and you need a little operational knowledge. When deciding the best business structure for your business that you're starting with someone else, you may wonder if you should form a partnership, a limited liability company, a limited partnership, or a limited liability partnership. Well, we have all the details to make the right decision for your business. But first off, what is a partnership? A partnership is a formal agreement made by two or more business partners to go into business together. A general partnership is an operations structure that is unincorporated. There's no need to submit any paperwork to the governmental authorities, but it's good to have a written agreement. In this agreement, you'll simply outline everyone's responsibilities. You can also choose a joint business venture recognized and regulated by governmental authorities. Multi-member LLC. An LLC with more than one owner is a multi-member LLC or an LLC partnership. With an LLC, you get personal liability protection for all members. In an LLP, or limited liability partnership, each owner does have personal liability for what they do. Still, they may be protected from liability for any wrongdoings of the other owners or the LLP. An LP, or limited partnership, will have at least two owners or partners. But one of these owners has a limited personal liability, so they are only liable for debts up to how much they have invested in the business. There also needs to be a general partner who has management control over the operations, but has no liability protection for debts accrued by the company. A GP, or general partnership, is the most straightforward business relationship for two business owners to form. You just have to have two or more people starting a business, and you don't have to file anything with the state. There is no liability protection for any of the company's owners. Each one has personal liability for the debts of the business and the things that the other owners do. You may be wondering what the difference between a GP and an LP is. Now remember that a GP doesn't offer liability protection for anyone in the business. An LP is incorporated, and you have to have one general partner, and you can have limited partners. Those limited partners aren't involved in the daily activities of the business. They just provide capital or advise the company. So they have limited personal liability for the amount they invested in the business. All right, now what's the difference between an LP and an LLP? An LLP, or limited liability partnership, makes each owner only liable for the actions they take. A formal operating agreement is required listing all members' duties and liabilities. LLPs are considered pass-through entities. So each partner reports their share of their profits and pays taxes on it. LPs don't pay self-employment taxes. Also, LLPs are usually limited to professional firms like law firms, accounting firms, or medical practices. You can use the LP structure for any business. So the big one, partnership or LLC. An LLC is a fusion structure. It's like a partnership, but an LLC has to do state filings. Also, the operational requirements differ. Each year, you have to file annual or biannual reports. Taxation may be the same, but as an LLC, you can decide to be treated as an S Corp or C Corp. More about LLC, S Corp, and C Corp you can find in our separate playlist about this. The link is in the description below. With an LLC, you have to file articles of incorporation with the Secretary of State, including your operating agreement and other documents. Your filing fees range from just under $50 to $500. GPs don't have to file with the state. However, are the operational requirements different for partnerships and LLCs? So, liability. When you have a GP, you can be liable for all wrongdoings and debts of the business. As a separate legal entity, an LLC offers asset protection for members. LLPs and LPs can provide liability protection for the actions of other partners. The securities regulations. So with an LLC, you can sell interest in the business. LPs can do the same. How are partnerships and LLCs taxed? All partnerships and LLCs have to file federal tax returns each year on Form 1065. You have a pass-through tax structure if you have a partnership, so all income, losses, and deductions are reported on your personal income tax returns. Each partner is taxed like a partnership with an LLC, unless you choose to be taxed as an S Corp or C Corp. You should know that limited partners sometimes have to pay self-employment taxes if you get regular income from the business. Let's wrap this up. GPs are easy to form, but they don't offer the liability protection that an LLC would. LPs and LLPs can provide liability protection to some partners. Well, that's it for today. Thanks very much for watching. If you want to know more about what an LLC is, its benefits and disadvantages, or about sole proprietorships, you'll find the link to those videos in the description box below. Also, don't forget to like and subscribe. Feel free to write in comments if you have any further questions. We will see you next time.